This is Gerardo Del Real with Resource Stock Digest. Joining me today is the Senior Vice President of Corporate Development for Calibre Mining, Mr. Ryan King. Ryan, interesting times, interesting couple of days in the markets. Great time to have you on. How are you, sir?
Excellent. Very good, actually. Very good. It's very interesting times, as you said.
Well, listen, let's get right into it. I want to talk about the expanded 100,000 meter resource expansion and discovery drill program at the flagship Valentine Gold Mine, right? Property. But before we get into that, I have to get your take on what I'm viewing as one of the most bullish setups for gold that I've seen in quite some time. We're at record high gold prices. We just had the single highest monthly close for the gold price, and as far as my eye can see, I see nothing but runway with the potential for some pretty aggressive cuts on the back of some weak economic data here in the U.S. Are you viewing it in a similar way?
Well, self-interest is, as people probably know, is a great motivator. So as a gold executive, gold company executive, higher gold prices are always favorable to me and to us, obviously as a producer. So no, but look, I mean, I truly believe that we are set for a very robust bull gold market, and primarily because, you know, if you look at history, when rates did go up or stayed higher for longer, it was negative for gold or gold prices, and a stronger U.S. dollar has always been negative for gold prices. So when you look at the bigger picture here, we've been seeing higher and higher gold prices in the face of rising rates or a stronger dollar. And therefore, when we step back and look at things now, I mean, with gold at all-time highs, and we've been in that higher and stronger environment, this sits up incredibly well with the macroeconomic landscape today, given that we continue to hear easing and lowering of rates and wanting a weaker dollar. So I think we are absolutely set up for higher gold prices. And, you know, we've seen record purchases from central banks around the world. So I believe that theory and that thesis is setting up very well. And we've hardly seen any investment purchasing, you know, into ETFs or new active natural resource or gold funds, precious metals funds. So I think, yeah, absolutely. I'm really excited about the future here.
Yeah, I'm talking my own book as someone that, you know, writes checks in the resource space. But again, the setup is as good as I've ever seen it in my 15, 16 years in the market. Let's talk Calibre specifically. You had some news here a few weeks back. You expanded the 100,000 meter resource expansion and discovery drill program across the flagship, right? That being Valentine. And so, look, I think with Calibre, you look at the production profile, and we'll talk about that. It's as good as it gets out there. You're moving forward with the Valentine Gold Mine construction. I think you're somewhere like 73-74% complete there. And now you have a really, really aggressive resource expansion and discovery drill program. Can you speak to where we're at with that?
Absolutely. So, look, I mean, let's talk about Valentine for just a minute. I mean, when we look at Valentine and the fault system that is there, and for the audience, big fault system provides the plumbing. It provides the opportunity for fluids to flow up, and therefore the potential for gold deposits to be discovered in this type of geological setting. So it's incredibly attractive and prospective. When we look at other areas of Canada, let's take, for example, Timmins, which has got what's known as the Porcupine-Dester Fault, which is multiple kilometers long, or the Cadillac Fault in Val-d'Or in Quebec. These types of systems have been explored for probably a century. I mean, decades and decades, and have found multi-million ounces of deposits along these types of fault systems. For example, there's a well-known past producing and producing mine Eldorado has now that's produced well over 10 million ounces of gold called Sigma-Lamaque. Sigma-Lamaque has a very similar geological setting that Calibre has at the Valentine asset in Newfoundland. But here's the key, and here's the interesting aspect of the whole thing, is Valentine has really only been discovered properly since 2011, right? So we're talking 10 years. And in that last 10-year period, I think a total now of a little over 5 million ounces in all categories have been discovered. But that's only across about 6, maybe 7 kilometers of what we call the Valentine Lake Fault System, or the Valentine Lake Shear Zone, which travels and has been mapped out 32 kilometers long. So, we're incredibly excited about the exploration potential. So we've had prospecting drills across the property now for a little while. We've now, as you just said, because of that prospecting drilling, we see some very good potential. So we've now increased our program to commence a 100,000 meter diamond drill program. We've got 2 rigs actively turning. And already earlier this year, we drilled and identified a zone to the southwest of one of our pits and hit gold mineralization outside of the pit. So already telling us that there's very good potential to expand. So we've decided to turn up the program. It's fully funded. And that's why we're extremely excited is that Gerard, anytime a company is discovering mineralization, okay, or expanding resources, this is where there's a potential for very strong share price performance. So I'm extremely excited about the outlook here, the geological land package we have, and the potential that could roll into this, because we're building Atlantic Canada's largest open pit gold mine with the potential to get significantly bigger. So it's incredibly exciting.
Well, it definitely is incredibly exciting. I said this to you before. It kind of materialized. I thought that you were going to hit the sweet part of the profit cycle with your production profile and the assets, and that's playing out beautifully. Y'all have executed brilliantly on multiple fronts. I'm really looking forward to seeing how you close out the year at the end of Q3 and Q4, and it'll be fun to watch the gold price and see what you do with it. How is the balance sheet, and how are the margins? How is the production looking on that front?
Well, going into the year, we had given the market some guidance that our first half of the year, so January through the end of June, was going to be higher cost and lower production. And currently we're sitting at about 42 to 44% of full year guidance. So this is playing out exactly as we had anticipated. Higher costs and lower production. Now, getting into Q3, it's obviously we're going to see how it goes, but it is playing out exactly as expected. Higher production and lower costs in the second half of the year. So based on the plan, it's going to plan. We're excited about that because of the second half of the year, we should have significantly stronger production profiles. And we remain on track to meet our 275 to 300,000 ounce production guidance, which is exciting because as a junior gold producer, and then the build on of Valentine, with first gold coming in Q2 of next year, fully funded, this is going to transition us from a junior producer that generally trades at a lower multiple to a mid-tier gold producer that does trade at a higher multiple. So it's going to be very exciting on the second half of the year with all the exploration news, with the developments of Valentine, and then transitioning into that mid-tier gold producer, the 400,000 to 500,000 ounce range producer. Because as it's stated in the feasibility study, Valentine is expected to produce about 195,000 ounces a year at $1,000 all-in sustaining cost. So positive for the overall portfolio for sure.
No, exciting times, Ryan. Again, great execution. Congrats on that front, and looking forward to catching up in person here soon. I know conference season kicks back up in September, and I suspect we're going to have a busy conference season this year.
I do agree. I think we're going to see new investors starting to pay attention, and I think that as this, we're seeing record earnings from gold companies during the second quarter. So I think it's only a matter of time before floods of new investors and generalist investors will start to pay attention to this sector.
Agreed. Chat soon again, Ryan. Thanks again for the time.
Appreciate it, Gerardo. Stay well.
All right. Cheers. Hey everybody, Gerardo Del Real here. If you're enjoying the content that you just saw, you can let us know in 3 simple steps. Hit the like button, hit the subscribe button, and please share across your network and on social media. Take care, everybody.